Coming up on Market to Market, a mid-season economic snapshot from rural and Main Street America. Ernie Goss and Chris Robinson are here in studio for discussion and analysis next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, July 5th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The midway point of 2024 and the July 4th holiday allow us an opportunity this week to take stock of what's unfolded in the economy and in the commodity markets. We have our panel that will speak with us in a moment, but first, the markets. We are producing this program following Tuesday's trading session and before the actual holiday and the limited sessions that surround that day. For the shortened week, the nearby wheat contract added 8 cents and the September corn contract improved a penny. Decreasing crop conditions appeared to win over the tepid export market in the soy complex. The August soybean contract gained 17 cents, while August meal strengthened $4.30 per ton. December cotton shrank by a penny per hundredweight. Over in the dairy parlor, August Class 3 milk futures weakened 44 cents. The livestock market was mixed. August cattle shed 33 cents. August feeders put on $1.80. And the August lean hog contract increased 28 cents. In the currency markets, U.S. dollar index fell 9 ticks. August crude oil expanded $1.44 per barrel. COMEX gold lost $1.40 per ounce. And the Goldman Sachs commodity index was up more than 7 points to settle at 584.80. Joining us now are two regulars to the program. Ernie Goss is the McAllister Chair and Professor of Economics at Creighton University, based in Omaha, Nebraska. And Chris Robinson is Managing Director of Agriculture and Commodities at TJM and a regular market analyst for the program. Chris, good to see you.
Good to see you.
I don't get to ask you the first question. I'm going to go to Ernie first, okay?
Yes,
I know
sir.
that's a little different. Ernie, let's look at this report of yours that you give.
All right.
I keep saying almost for consecutive months, everything's below growth neutral. It's below 50. It's been that way for a while.
Yes.
Do we continue? Do we think we're going to see more months added to that below growth neutral?
I think we will, Paul. It's sort of like if you take a hand saw and you turn it upside down and put it in front of you. That's what we're seeing, like it's up and down, like the points on the hand saw, but it's always pointing downward as well. The economy is that way. We've been seeing it vacillating up and down, up and down, up and down. But right now, the Main Street economy, the rural Main Street economy, which we survey, these are bank CEOs in rural areas of 10 states, are telling us that the agricultural economy is weakening, and even the businesses on rural Main Street are also seeing weaker economic conditions. And as a result, I'm going to go out on a limb just to clear it away right now. The Fed's going to reduce interest rates. I mean, and they're going to say it's because they've whipped inflation. No, they have not whipped inflation, but the economy is weakening. That's not just the agricultural economy, it's the manufacturing economy, it's the residential housing, it's the commercial real estate. We're seeing too much weakness out there to hold on these interest rates, and that's true across the nation.
Is that cut going to come before the end of the year? Is it going to come in this next meeting, this next quarter?
It will not. That's in my judgment. That's July 30th, 31st. In September the 18th, 17th, and 18th, they meet again. That's when the cut will come. And it could be a 50 basis point cut, a half a percentage point. most the expectation would be a quarter point. It could be a 0.5%.
Your rural Main Street look, that there's a lot of factors in there, but it always kind of seems to be that it's tied mostly to commodity prices.
Absolutely.
Is that the biggest reason for this fall in your survey?
Absolutely. We're seeing it. You're seeing, and if you look at the prices right now, commodity prices, and we're talking about grain primarily in my judgment. Livestock's a different matter, but in terms of grain, you are seeing this weakness, and that's coming from a weak global economy, a strong dollar, which is hurting exports. Exports have declined year over year. Look at 2024, the first 5-6 months compared to the 23. Exports are down, agricultural exports are down. And that's causing some real pain out there right now. And some of it, again, is tied to the value of the dollar, but also just the Chinese economy just can't get out of its own way.
So you're thinking the federal policymakers, the federal dollar policymakers, they're not seeing a soft landing, they're seeing a landing that needs some help?
They do. It's not a landing you want to make in any plane, or at least the plane I'm on or you're on. It's going to be a harder landing than we expected. The lag effects are just getting longer. We've had 5.25% increase over the last couple of years. It's just now hitting, and it's hitting hard, and it's hitting again agricultural. Well, that's part of what's going on in agriculture, because we got farm equipment sales, for example. Those have to be financed, of course.
Well, Deere and Company, another round of layoffs,
Absolutely.
and Caterpillar has had some struggles as well. Those are always the big leaders in that sector, and is that, the old thing I think in the recession days was if one catches cold, we all get sick. Is that kind of the way?
Absolutely, and I have to say, and this is an advertisement for our bank CEOs who are taking the survey. Some farmers say, what the heck does the banker know about farming conditions? The banker does know about purchasing equipment. And 12 of the last 13 months, that index has been below growth neutral for the purchase of ag equipment. So they're resorting to more used equipment, repairing old equipment. So it's being tough. Look no further than the MOO ETF. That's an exchange-traded stock. And it's on MOO. It's down about from $90 to $70, and John Deere is a part of that index, the ETF.
Well, Chris, do you have clients that aren't buying new equipment? They're buying used if they can buy it?
I haven't heard any stories like that. I think most people are concerned about the fact that we are at 3-year lows in the commodity prices, corn, wheat, beans. To get specific, that's very close to 3-year lows. Right. And I think that's caught a lot of people flat-footed. I think the interest rate, what it costs to borrow when you have to go buy something new, that's going to slow people down. It slowed everybody down. We've gone from 0% to these 5% interest rates. So it has slowed down the economy, and the ag economy is based on, to large part, borrowing, especially if you're buying a $500,000, $1 million piece of machinery. That's going to get financed. So, I think that a lot of people are concerned, and we're hoping that we would have had a better first 6 months, and we have not. We had a difficult start to the year. We broke sharply early. We had what looked like we might have a rally. We had a 50-cent rally in corn. We had about a $1.30 rally in soybeans. We had close to a $2 rally in wheat. And just in the last month, it's all gone away. So that's been a hard piece.
I guess I've never asked this directly, but what is the impact on commodity markets, specifically commodities, if the Fed lowers or raises an interest rate?
Well, part of the reason we had the big rally between 20 and during the pandemic is all that new money came in, and we had inflation, and a lot of the financial community wanted to own commodities. And if you look at that, just in general, they wanted to own everything: corn, wheat, beans, cotton, silver, everything you could get your hands on. That's gone away now. Now people are less concerned about that. So even though you still have some commodities like copper, which is at all-time highs, pretty much across the board, all commodities have backed off. And I think that kind of ties in what we were saying. China's economy has slowed down. And again, that's, I think, had a big impact in our exports. And you're right. If one person gets sick, everybody kind of feels it. And I think that's what's going on here with our ag economy right now.
Do you see, Ernie, that China, or I guess I'm going to go back to housing. I'll get to China in a minute. The housing sector, when you mentioned the metals and the lumber, that was part of that pandemic issue. The housing market itself is always one of those big markers of the overall economy. Isn't there a little bit, I mean, median price keeps going up, inventories have not, and do we see anything that's going to help jumpstart, or does the housing market need to jumpstart?
The housing market is not going to jumpstart. You talk about inventories. Go on to reventure.com. They track inventories at the zip code level. They're in Florida, Georgia, Tennessee, California, not so much in the East Coast, inventories are up dramatically of the houses. I mean, we're talking about investment companies that went in buying and now they're going and selling. I've tracked some of the houses recently. You're seeing prices drop as much as 15, 20% in Florida now, we're talking. So the problem is not so much in this part of the country, but nonetheless, we're going to see prices of housing come down. And it just cannot go on like this. And as Herb Stein once said, if something can't go on forever, it will stop. That was Nixon's chief economic advisor. That's true, still true today.
Well, when you say Nixon, that gets us back to the 70s, and it's always kind of a discussion we have here. Are we headed? Are you seeing things reminiscent of what we did see in the 70s? I mean, the inflation's not the same number it was, but it's relatively high to what we've experienced. Are we in that period where we got bigger warning signs ahead?
Certainly not in agriculture, and I didn't live in this part of the country during that period of time, but nonetheless, we are seeing slower economic growth. In my judgment, we're going to see negative economic growth, meaning a recession. The inflation part of it, probably not. Now, that depends a lot on the elections. I had this horrible dream the other night. I fell out of the bed. That was such a bad dream about the elections. I dreamed somebody won. Now, sorry for that.
Well, I think there's many Americans that think kind of that same thing right now.
But both candidates, the chief candidates, are talking about spending. They're not saying it explicitly. Spending more money. That's increasing the debt. They're talking about erecting barriers to trade. That's not what this economy needs. We do not need an increase in tariffs. I mean, when is the point when you got to grow bananas in Iowa? You know, we grow soybean, wheat, corn, livestock, and export it and trade it for our bananas. That's what we need to do.
We're going to get to exports in a minute, but Chris, I need to get to the wheat market because we are watching a geopolitical issue, as always there, and that hasn't changed this wheat market. But now it's the weather in Russia and Ukraine that's influencing the wheat as we're having harvest in the wheat belt in this country. Which is the bigger mover on the market right now?
Well, here at home, we're having a good harvest. The yields are going to be higher, and that's probably going to be reflected in the next July 12th report. So we'll see that July 12th. As far as the rest of the world, I mean, I was just reading today that actually now Russia's starting to say their yields are a little bit better. There is some concern coming out of France with Matif, where they've had hot weather there. And that's part of the reason we've had a little bit of a bounce, but we had a tremendous rally and then a tremendous collapse. We haven't seen a collapse like that in wheat, where it looked like we were actually going to really start a nice rally. And I think it's going to be something that a lot of farmers are going to be scratching their head out for a long time, because I know a lot of analysts, myself included, were surprised at the severity of that correction. We're basically right back down at 3-month lows, 4-month lows. But I think that now the number one thing I would be watching is what are the yields going to be here at home? Is that going to put more pressure? Because it's another case where we may be producing more of what currently the world wants less of, and that means potentially lower prices.
Well, you're talking wheat, but you could also talk about the corn market. And I want to get to our question because it's really a carryover from last week. Seamus in Iowa wants to know, if there's so much corn in the bins, why is basis good and end users say it's getting hard to get and find?
2 reasons. Nobody wants to clean out the bins when it's 100 degrees. A lot of guys are still finishing up planting, so that's probably 2 together. The other is, if you look at the numbers that we were just given on the last report, on-farm storage is 3 billion bushels. That's 800 million bushels more than we had this time last year. Okay, that's a big number, and that's kind of, are they going to adjust that? We'll see. Now, the good thing is the basis in the areas has some 50 cents over. So if people want it, they will pay up for it. So instead of fretting about why the basis is higher, look at where the flat price is. And if somebody's willing to give you 50 cents or $1 over that, take advantage of that, because the basis, that may change as we get further on in the year.
Let's go to new crop on corn, because there's still this acreage of people are planting, like you said, but there's this major thought that and fear we're going to dip below 4 and stay below 4. Do you see that coming to fruition?
For new crop corn, well, we got down to 412. We were back to the June 2021 lows. In October, November this year, we were at 512. So we've come down $1. $1 a bushel is it's a lot of money. When we grow a 14 billion bushel crop, all that revenue is going to be missed. And historically, when we get in trends like this, now the managed money, and they're just trend followers. They just go with the trend. Mm-hmm. They will start looking at old lows. Will we get there? The contract low for December corn 24 is, I believe, 396.5. Don't quote me, but it's right down there. That may be the near-term risk. We may go down there and take a look at that as we move through July. So, we do have some issues with too much rain. We are going to find out if any of those acres in those flooded out areas can have an impact. At this point, those are the kind of straws we're reaching at, given the carryout that we have and the current trend that we have.
Let's go to beans, because some of those same factors are in play when it comes to acres. Let's old crop quick. You seeing any reason that there might be some selling here of beans?
Well, everybody's short right now. We had a $1.30 rally. We've given it all back. Now I think there's still most of the money that is coming in on the short side now is coming in on the November side. So I would watch that, the August, Sep, November spread. But we've already seen new crop beans dip below 11. That's going to be the fighting line.
Yeah, and that's the number I wanted to point out. Again, same question, like it was for corn. Is below 11 a concern for you?
Yeah, absolutely. 11, and then you start doing kind of what we did in wheat, where people say, what's the old low? What's the old low? And it kind of can be a self-fulfilling, cascading thing. And it's something to definitely be concerned about. And that's why this is a year where you've got to be, and we've talked about this all year, back in November, it was like you want to defend $5 corn and at the time $12.50 beans. Now we're talking about defending $4 corn and $11 beans.
We'll get to livestock now. Ernie, what's the Main Street shopper thinking right now? Are they? Do you hear anecdotes of any shopping habit changes as the consumer tries to curtail spending?
We're seeing retail sales, and we do survey the bankers about retail sales on rural Main Street. And we do another survey of manufacturers in the same states, and it's weak. I mean, we're talking about, we talked about, for example, back to Christmas, and it was a big hubbub, 4% growth. Well, guess what? The inflation year over year was about that or a little bit more. It was in other words, negative. So we're in terms of adjusted for inflation, retail sales are down, and they're moving down on rural Main Street. They're moving down in the rest of the economy that is adjusted for inflation. So that's 67% of our economy, of course, is the consumer, and it's looking weaker. And the problem, one of the big problems is debt. We're all covered up with debt. The government's covered up with $35 trillion, our federal government, $35 trillion. We're talking about credit card debts at record levels. And and the money that was given to individuals, I say given, provided in the 2 stimulus packages and the IRA, that money's basically gone as far as the consumer's concerned.
So that becomes at the grocery store a little less wiggle room. So choice Absolutely. Of meats changes. Less steak, more hamburgers.
Absolutely. In our survey, though, in terms of the livestock producers doing much better than those who depend solely on grain, but usually they're doing both. But nonetheless, yes, you're going to be switching. We're going to see more of that. But, and of course, this week is the high water mark for livestock sales. Or not, I should say meat sales.
Yeah, because we're trying to grill in amongst
Yeah,
the middle of
we
the
are.
show. We're going to do that between the show and Plus. I don't know if I told you that. Did you bring something to share? I forgot to say that.
Just my economic whatevers.
Your
you wanna call
economic
it.
tables. That's how you're setting the
That's-
table. Chris, when we look at live cattle, listening to Ernie and what the consumer is thinking, that doesn't seem to be impacting the cattle market too much.
No, we've continued to see strong demand from packers. Even though we had the issues, we had the sort of the December debacle. We went down there in December and things were looking pretty dire. We've gotten all that back. We're 18 to 20 cents a hundredweight higher than that. And even though when we had the April issue with the bird flu, which kind of hammered everybody, we came back strong. So that's always a sign of strength when the market gets bad news. And it is interesting that, anybody that has to go grocery shopping, I think they have made the choice to, what cut of beef am I going to get? So to see prices as high as they are now, I've been telling people this for a while. We're at 8-month highs. It is a gift for producers. At some point, you don't want to be standing there going, what happened? How do we miss, because we could very easily go back down. It doesn't take much to turn this market. My biggest concern with the livestock market, especially the cattle market, is the stock market. Stock market seems like it's never, ever, ever going to correct again. If it ever does, the first thing these guys do, if they cannot sell enough S&P futures, they always sell live cattle and feeder cattle. So I always tell my clients that are ranchers, that is the big what if, and it's very odd. We've just gone vertical for 2 years. We've had a couple 6 or 7% corrections, and this market just keeps coming. And if you talk about them, if they're going to do a 0.5% rate cut, that's going to be some interesting timing right there, because is the market going to rally or is the market going to break? So as far as cattle producers, you're giving a gift right now. Please take advantage of it.
Let's get to hogs to close up livestock there. That is one that market has turned, and it's almost like one is against the other right now.
Yes.
Does one give you any indication there's a change coming?
No, I mean, I think that there seems to be, solid demand, but there was we had a tremendous rally beginning of the year, and in fact, it caught the professional traders completely off guard. The managed money, they were long 95,000 contracts at the top back in May. And just between May and this recent low, we've given back the entire move. And there's a friend of mine, JD in Indiana, he always likes to say, hogs trade like they ice skate. Hogs are a very, very difficult trade, and this has been a classic example. Now, right now, we're at contract lows. The funds are all short. So hopefully they have it wrong and we can rally. But I would watch that spread between cattle and the lean hogs.
You concerned about anything he's saying, Ernie?
Well, Chris was talking about the stock market. This stock market is, there are 10 of the S&P 500. 10 stocks have led this. We're talking about overall a weak stock market. And you're talking about between my expectation of a rate cut on September the 18th, between now and then, I think we're going to have a stock market adjustment. I may call it a correction, but there's too much fluff in those stocks right now. Again, we're talking about price-earnings ratios in many cases, the price of stock to the earnings of the company.
Do you see anything in particular that tips us off that this is happening? Is this someone goes on vacation in the Hamptons and they're talking amongst themselves and somebody says it's not good, and then that's when they come back into the city and sell? Is that how that starts? We
sort of never know until it's in looking back. For example, the last time, 2008, was the significant downturn. It was because of residential housing, these tranches of housing. That's what the downturn there. And I think this time it's going to be related to real estate. And the commercial real estate's already there, but the domino is starting in Florida. Look at the inventories in Florida of houses for sale. That's spreading in Georgia, Tennessee, and we're not going to see so much of it here, but down particularly in Arizona, Texas, and that's what we're going to see, and that's going to scare some folks. And once it, as Chris is sort of saying, once it begins, it's like a dominoes falling very quickly. So what I would expect between now and September the 18th would be a weakened stock market, because the economy is going to be showing weakness. Look at the jobs report for the next jobs report.
And we're going to look to you in Market Plus and to you as well. Chris Robinson, good to see you. Ernie, thank you as well.
Thank you.
Appreciate it. We are going to pause this analysis and continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. The audio format is integral to our distribution of our coverage of rural America. One way is to get the word out is through our MTOM podcast. The weekly offering is a conversation with those in and around agriculture, as well as weather and energy. Subscribe today wherever you get your podcasts. Next week, we check in with our 2024 producers with the knee-high 4th Progress Report. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.